Good morning and welcome to Market Moves, November 14th, 2025. I'm Cherie. Everyone calls me the Money Lady. And today's topics, we have a few things we're going to talk about today. The shutdown is over, but there are still some backlogs that's happening within the mortgage industry. So we're going to talk about that. We're going to talk about rates. We're going to talk about the 50-year mortgage a little bit. I have two realtor opportunities. This specific session are for my real estate professionals. And we are just going to jump right into the conversation today. Uh, I am Cherie. Everyone calls me the Money Lady. I am licensed with Envoy Mortgage, and there's all of my details and information down there. So, agenda for today is we talked about the U.S. government opened again, some of the things that's happening with regards to that, some of the backlogs that's happening, a little bit of rate uncertainty that's happening right now. 50-year mortgages has been the topic of the week, so I'm going to give you my quick 2 cents about it. Do buyers truly favor tech in home buying process? There was a study that came out. We're going to talk about that. And big news in the luxury market. We're going to talk about that as well. So everybody always asks me, Cherie, what's the rate? Rates ticked up a little bit, but not so bad. Rates are still about 6.34%. Again, these are the rates for people who have over 800 credit score, putting down a decent amount of money, things like that. However, I'm locking people in, that have decent credit scores and are putting down 3%, 5%. I'm locking them in the high sixes, so mid to high sixes. So it's still a decent environment for people to purchase. Also, there are quite a bit of price decreases that's happening in the market. I have one client this week that found a property and he was going to offer a lower price because the property had been sitting on the market for a little bit. I instead did a side by side for him where I showed him, like, hey, yeah, you can ask for $20,000 less in the purchase price, but you want to bring as little money to the table as possible. So why don't we ask for it as seller credits? And that way we can reduce the amount of money that you're bringing to the closing table. And he's also getting down payment assistance as well. So the way that I worked out the numbers, he would have had to bring about $3,000 to the closing table. He decided not to put the offer on that property, but at least that was a good side by side for him to see. So right now, especially in the Metro DC area, there are properties that are having price decreases. If those properties are going to appraise for the original amount instead of asking for the price decrease, then let's do a side-by-side comparison and see if we can save on the interest rate or save on the closing cost. So, next thing here is the government is back open. Yay. I know a lot of my federal employees were, just very anxious about it, but we seem to be back open. That doesn't mean that things are moving like totally the way that they were before. The reason for that is because we've had delays. So USDA had the most delays. If you have a client or a borrower that was looking for a USDA loan, the new guarantees were paused. So they're going to have the slowest recovery with regards to getting people back on track. FHA loans, case numbers, endorsements, and condo approvals were delayed. Staff is returning now to the Federal Housing Administration. So you will see some delays with that. VA loans were the least impacted. I actually closed a borrower during the shutdown with a VA loan. So shout out to her. But that if you have somebody with a VA loan or you're trying to get a VA loan yourself, then that is the least impacted. Our self-employed borrowers, sometimes you had to get those IRS transcripts for your mortgages. It may still be a little bit slower with underwriting with regard to our self-employed borrowers. So you just want to pack in, if you're a real estate professional, a little bit of contingency time for that. And then finally, the Fed watch. December rate cuts, those are unlikely. A couple of things that's happening with that is the data that the Fed usually uses in order to determine if they're going to do a rate cut or not, well, that's been delayed. So, um, you know, right now, the mortgage industry is under the assumption that the Fed is not going to cut rates in December. We will see rates potentially go down if the Fed decides to cut rates in December. So we just have to wait and see with regards to that. Next thing we're talking about here, I had already talked about this, but I'll just show it again here. Oops, rate uncertainty due to lack of economic data. And we do have a Fed watch going on for that. Let's talk a little bit about the 50-year mortgage and the controversy that's happening with the 50-year mortgage. So you may not have seen some of the information, but there was a post. I don't know if it was on Truth Social, Twitter, wherever, where the administration, Trump administration, said they were thinking of having a 50-year mortgage in order to deal with affordability. And yes, not to get too political, but this really did come up because of all of the wins that Democrats had. Was it this week or last week with regards to Zohran Mamdani and the other Democrats that won, and the really people harping on the lack of affordability. So the 50-year mortgage has been floated around with regards to how do you get the monthly payments lower? And the administration believes that if they can get the monthly payments lower, the people will not necessarily be as worried with regards to the additional interest that they're paying, or the life of the loan, the fact that they will have a mortgage maybe until they pass away, things like that. Uh, I um, I see both sides. I see both sides. I do believe, and this is not a knock against the Trump administration or anything like that, because I am apolitical on this channel. I do believe. So I do not run to these controversies and all of these discussions unless like it's actually put into the guidelines. So right now, it was just a thought that's being floated around. It's something that's being considered. It is not a hard and fast rule. The other thing, you may have seen Trump on Fox, and he had mentioned 40-year mortgages, and Laura Ingraham, the host, said, no, they're 30 years. The truth is there are actually 40-year mortgages that are available. We as mortgage professionals tend to not offer them, and they're offered in specialized circumstances, but there are some 40-year mortgages that are available. I am personally a fan as your financial, um, mortgage professional, that the faster you can pay off your mortgage, the better it is for you and your family, because you will be able to have lower interest payments when you do that. So just again, something to think about. But right now, this has not been put into place. So we kind of just need to step on the brakes here as a community, um, and just say, hey, let's see what's going to happen. Also, the final thing is, just because, let's say they roll out the 50-year mortgage in the next 3 to 6 months, that doesn't mean you have to take the 50-year mortgage. You and your family can still decide on the 30-year mortgage, 25-year mortgage, 15-year mortgage, whatever is going to work for you and your family. That's what you should consider, and that's what you should do. Um, I could talk about whether or not the prices are going to go down with housing. I will say just very quickly, I don't think that prices are going down. Um, and I can go into a longer explanation if you all want to have that one on one on the phone. I can go into a longer explanation as to why I don't think the prices are going down, but at least not significantly. They may go down in certain cities, certain pockets, but not overall across the country. So let's talk about some of the opportunities that are available for my realtors and real estate professionals that are out there. The first thing was, there was a JD Power study that was done Turns out when people are getting a mortgage, they actually prefer human advisors to apps, which is very interesting. Turns out that satisfaction for people who are purchasing mortgages increased or spiked when lenders guided clients before they started shopping, and only 54% are comfortable with AI in the mortgage process. And that is with AI being a part of the mortgage process, not a whole part of the not the whole thing of the mortgage process. The other thing that came out in the study in the article, because I did read parts of it, was that people, 71 or 74%, 71%, 74%, something like that, of people wanted transparency with regards to AI being used in the mortgage process. So I think that was interesting as well. Mortgage advisors, though, are starting to have systems available where we're able to put your mortgage information into a system that you would have access to. You would have a username and password to get access to it. And then you can ask the system different questions in order, as you're going through your process, in order to figure out like certain questions that you would have for your family. So that's again something else that has come about, and I think it's going to be a great thing for people who are purchasing, buyers, borrowers to know, to get all their questions answered. So through the power of artificial intelligence. Another thing that's coming up here, luxury is more affordable. According to Realtor.com, high-end buyers are seeing real value for the first time in years because prices are softening. The inventory is still a little bit tight. But for all of my real estate professionals out there, move-up buyers now may qualify with seller credits in order to buy down rates or in order to help with closing costs. So experts are suggesting that people rerun their numbers in order to see if a luxury property would be worthwhile for them to purchase. One of the big things that I had was a warning with regards to taxes. So, tax season is coming up. If you have a self-employed borrower, or if you are a self-employed borrower, the way you do your taxes could impact your purchasing power if you are trying to get a conventional loan for the luxury market, or even if you have somebody who's self-employed who wants to buy a regular home and they're going to use the FHA loan or the conventional loan. Taxes, the way people do their taxes can affect their purchasing power. So I have some of my self-employed buyers right now who want to buy in 2026 coming to talk to me now so that we can strategize what needs to be on their taxes. And that's just not just if someone is self-employed like full time. It's also people who have W-2 jobs, but they own real estate investment property. The way they do their taxes could impact their purchasing power. So just encouraging people to come to see me now or between now and July 31st. So that way I can crunch some numbers if it's needed. And then we can also send something to your CPA so that your CPA is ready and knows, has a guide with regards to how we as the mortgage professional is going to look at the taxes in order to determine if they should, to determine how they may want to structure your taxes for 2025. So Christmas money is still with investors. So for all of my real estate professionals, Christmas money is still with your investors. Your investor clients need to get a property in service before December 31st, 2025, in order for them to have tax benefits. That's forthcoming. So I definitely suggest if you are a real estate professional, you contact your investor clients. If you are an investor and you're looking to get some savings on your taxes, or if you are a high net worth professional, high income professional, and you need savings on your upcoming taxes, buying a rental property, whether it's a long-term rental property, medium-term rental, short-term rental property, that is going to be a great way for you to be able to save on taxes. But you need to buy, and that house needs to be basically quote unquote in service by the end of the year. So again, just think about that. And I am available this weekend for all of you who want to have a conversation. 571 You can either call or text that number. And of course, you can contact us today as well if you would like to chat about any kind of real estate loans that you are looking for. If you're looking to strategize, things like that, I would love an opportunity to help you. All right. Thank you so much. Have a blessed day, and I'll see you next week. Bye.